Hello, everyone. Thank you so much for joining us and welcome to TaxAid. This is Volunteer Training 2023 Tax Law Changes Part 1. I am Andy. I am going to be your presenter. I run the Fair Oaks site, and it would be good to see you guys out there if you're ever in the peninsula. I've been with TaxAid about 18 years now, and I'm currently with the Tesla Tax team. So tax has been my whole career up to this point. So and TaxAid it's been a nice extension of that as well. So before we get started, wanted to go through some T's and C's first. This training, this summary only provides basic information about tax law. Nothing in this summary will supplant or replace the requirements of the tax code. Summary is also not intended to be a substitute for tax advice from a qualified legal and tax professional. And of course, you can always find more information about tax law on irs.gov. So in terms of the agenda, we're going to go through what's new in 2023. We're going to go through expired provisions and also talk about provisions that were extended for 2023, which really covers tax year 2022. Okay, so what's new in 2023? And some of this is actually breaking news, so to speak, as of recording of this video. So as most of you probably know, the statutory filing deadline for federal tax returns and state tax returns is April 15th. However, 4/15 is a Saturday this year, which then defaults to the first business day, which is the 17th. However, the 17th in DC is Emancipation Day. So the statutory filing deadline for most taxpayers is actually April 18th, which is the Tuesday. That said, the IRS just released guidance that confirms that folks who live in disaster relief areas, such as folks affected by the recent California storms, they will have until May 18th to file their tax return. And you can see on the screen some of the counties that are affected. Please refer to the full list on the IRS's disaster relief website for more information. Also new for 2023, income limit for the upper limit for folks qualifying for the earned income credit is now $60,000. And that is also where TaxAid has placed their income threshold for clients coming in. So just make sure that your screeners are checking to make sure that we don't have any folks that are any taxpayers or clients that are going to exceed the 60,000 limit. There is a new filing status, although this is actually a replacement of the qualifying widower. So for spouses who had, so for taxpayers that had spouse that passed in either 2021 or 2020, and they have a qualifying child, they would be able to qualify for this qualifying surviving spouse status, which defaults to the married filing joint brackets. Educator expenses. So for taxpayers that are educators, to the extent that they have out-of-pocket costs for their classroom, for example, the educator expense, which is above the line, is $300 this year as opposed to $250 last year. There were some changes to the 1040 that you should be mindful of. One example is that scholarship income, which used to be on page 1 of the 1040, is now hiding somewhere in Schedule 1. And that's just one example of changes to the form. No stimulus payments this year. The economic recovery payment that we saw the last 2 years, that's no longer relevant for tax year 2022. You should also be mindful that for folks who drive for that are self-employed and drive around and have business miles, the mileage rates are actually bifurcated into 2 periods. The mileage incurred from January to June is priced at 58.5 cents per mile, and any mileage incurred from July through December is priced at 65.5 cents per mile. So you definitely want to make sure clients provide you a full breakdown of business miles, not just for the full year, but from January through June, and also then July through December of 2022. All right. Let's talk a little bit about the form 1099-K. This is actually not a new form, but we see this form anytime there are credit card payments made on behalf of the taxpayer. You see this typically with gig economy workers such as DoorDash or Uber or Lyft drivers. Under the American Rescue Act, and all credit card companies have to report transactions greater than $600 for reported on a 1099. Must be reported on a 1099-K to that service provider. However, at the very last minute, last week of December, IRS announced that they were actually going to delay administering this law. So, we may not see quite the volume of 1099-Ks that we were originally anticipating, but there still may be clients that come in with an amount on their 1099-K. The most important note here is that you ask the client why they received it, and if they are considered self-employed, then we'll have to prepare a Schedule C for them. Okay, let's talk a little bit about expired provisions. Most of these are remnants of the American Recovery Act post-COVID. So the first expired provision, the extended child tax credit, that now defaults to the baseline child or the base child tax credit that existed before the American Recovery Act. So I believe that it used to be up to $3,600 per dependent, and now it's back down to $2,000 per dependent. We talked about the stimulus payment, the economic recovery rebate credit, that's no longer relevant for tax year 2022. The increased amount of child and dependent care credits, all those eligible expenses and modified phase outs for higher earners, that's all been rolled back to the baseline levels prior to the American Recovery Act. There were also changes or enhancements to the earned income credits that are no longer relevant. There used to be higher income limits for taxpayers with no qualifying children that now has rolled back to the lower income thresholds. Ability to figure the credit based on 2019, that's no longer relevant. It will default now to current year income, and also the elimination of the upper age limit. And finally, charitable contributions. Last year, we were able to, for folks who for taxpayers that took the standard deduction, there was an above the line deduction available for folks with charitable contributions. That's gone too now. So if you have a taxpayer that brings their shoebox full of donation receipts, unless they itemize, which is probably the exception and not the rule here at TaxAid, unless they itemize, those donation receipts probably won't help the tax return. And then there are certain qualified sick and family leave credits that expired as of September 2021. Okay, let's talk a little bit about extended provisions, some of the provisions from the American Recovery Act that are still in play for 2022. These are education related, the tuition and fees deduction that are above the line. That's still in play. There's still a choice between the above the line deduction or the American Opportunity Credit. Student loan forgiveness, if you have a taxpayer that qualified for this forgiveness, that forgiveness is not taxable for 2022. And then there is income exclusion for employers that pay off student loans. So that exclusion is also still available. Some other miscellaneous items. If you have taxpayers that are self-employed and have meals deduction, there's still an opportunity for 100% deduction there. To the extent that they had indebtedness from a principal mortgage that was forgiven, that's also not taxable. I believe the limit there is $2 million is still excluded, or the first $2 million is still excluded. And finally, a carryover from the old Affordable Care Act to the extent that folks are purchasing plans on the marketplace. If they are over 400% of the federal poverty line, they may still qualify for the premium tax credit. Just load those numbers into Lacerte and it should figure that the PTC limits out. And that brings us to the conclusion of part one. If you have any questions about this presentation, make sure to email the link and visit the website below. Thank you again for your time. I hope you guys also tune in to part two of the training, and I wish you guys a great year and a great volunteer experience here at TaxAid.